made the terrifying journey here through the rain and the influenza virus to be with us tonight, and hello to everybody who's online as well. Thank you for joining us, and welcome to our discussion, which is about how long must we wait for the flagship security token issuers. And that question is shorthand for the fact that despite the many well-advertised advantages of security tokens, we at present seem to have almost as many security token exchanges as we actually have security tokens in issue, which is a mystery. We have the technology, we have the infrastructure, or at least most of it anyway, and we have the laws and the regulations in place, our classic securities laws and regulations, and we even have investors to buy security tokens. What we lack is issuers. So where are they? Our purpose tonight is to come up with some answers to that question. And in finding those answers, we'll be looking to you in the room and to our audience online to help us identify those answers, as well as, of course, of our experts here tonight. And as Wendy mentioned, thanks to a combination of Thanksgiving and not one virus, not just COVID-19, but H1N1 as well, our gathering this evening here is a bit smaller than we would have expected. And as Wendy also mentioned, the influenza has felled one of our panelists, Gilbert Verdian, the CEO at Quant, which is a great shame because their business, making blockchain protocols and traditional systems interoperable, is genuinely germane to this topic. But there are two upsides to what has happened. The first is that there will be even more alcohol and canapes for those of us who've actually made it here tonight. And the second is, of course, that this discussion can be even more interactive in the physical sense than it would have been ordinarily, because we're all here in the end to learn from each other. So I'd urge all of you here and those of you who are online to think of questions and comments and put them to me, to our panelists, and to each other, if you like, as we go along. We've also put on your seats, and this will be sent to those of you who are online, a questionnaire to get some sense of what your own thoughts are about security token issuance. We'd be very grateful if you would fill that in as well. We will, of course, share the results of that with you once we've had time to analyse it and write them up. Now, to begin our question and answers, my first duty is to introduce our sponsor, Massimo Butti. He tells me that only his mother calls him Massimo. It usually means he's in trouble. So I'm going to call him Massimo throughout the occasion, just to keep him under a tight leash. But you can call him Max if you want to be friendly. He is the head of equity at SDX, the digital asset exchange, which is owned by the Swiss Stock Exchange. Max is going to make a short presentation, after which we'll begin the open discussion with those of you in the room and with those of you online. And that discussion will benefit not only from your contributions, but also from the contribution of Heston Kim, the Chief Strategy Officer and co-founder of Super Oracles, a business founded on the conviction that the future of blockchain in general lies in tokenization, and that tokenization in turn relies on the ability of smart contracts embedded in tokens to access data sources quickly and securely. So thank you, Heston, for joining us. But first we'll hear from Massimo. I'll hand over to you to give us a short presentation on the issues before us. Thank you.
Thank you very much, Dominic. And again, thank you very much for you who are physically in the room. And I can't thank you enough.
Signal lost.
Okay, I can't thank you enough for braving the elements. It was really rough about half an hour ago when I came here. So you have my unending gratitude for that. Right. This is a very short presentation, and it's not even a presentation. It was something that we discussed with Dominic, and how we ease into the topic of today, and what is our vision a little bit of the big question. What is going to be on, or when on, and why we didn't have a marquee IPO, digital IPO so far. And I think that we need to go back a little bit to the basics when when thinking about security tokens and how the digitized world interacts with still the traditional world, because there is still a traditional world of finance out there, which actually represent 99.9% of the financial world still. So we tend, I think, a little bit to lose sight of some basics. So I just wanted to provoke also some thoughts and some conversation that we might get back to during the session. So one of the things that we tend to still forget or push aside sometimes, especially when we run exchanges, is that we need issuers, as Dominic said, and issuers still raise money in two very traditional ways. So they still have to decide whether they have to raise equity or raise debt. Now, with the introduction of crypto-based financing, or all this newfangled and spanking new and brilliant world of digital securities, there's a new element that is being added, which is, there is a set of benefits and features that are connected to this technology that can really make a difference to companies raising financing, both in the format of debt or equity. However, one of the things that we tend to forget is that we might come up with a set of very smart solutions and brilliant ideas and brilliant structures, brilliant digital artifacts, all sorts of wrappers and all the rest of it. But we tend to forget that because of companies are still looking at raising two types of equity of securities, two types of capital with a set of obligations and benefits, but that are very, 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 very well defined. The technical solution, so all these permutations, all these technical wrappers that we use in DLT, based in DLT or different protocols, if they are not underpinned by a context, a legal context, and a regulatory context, somewhere down the line, they're completely meaningless. So this is one of the first things I wanted to leave you with for the rest of the conversations, is that, yes, we are waiting for the marquee issuer, but are we providing, associated with these new digital artifacts, the appropriate legal framework and regulatory framework sometimes to support these issuances? So, and that also leads me to another point, is that when we talk about DLT and these new digital artifacts, digital wrappers for traditional securities, where does DLT really comes into its own? And I think that, again, we tend to overcomplicate a little bit things and to really look at not really what matters to issuers. And what matters to issuers is very simple, is basically how much are we going to raise, how much is going to cost, and who are we targeting as investors. DLT can be very powerful in solving some of these pain points and some of these issues, but is by no means a panacea for that. Again, you need processes, you need regulatory frameworks, you need legal frameworks that can underpin that efficiently, because otherwise you're just complicating and adding potentially cost. During the life cycle of the asset, so after you placed it and after you raised the money and you're on your way with your startup or your big company out there with your digital securities, again, there are pain points that can be addressed by DLT, but some that are not. So inescapably, when you're looking at the marquee IPO of the future, inescapably the company that is going to come first is going to have a foot into traditional finance, one way or the other. We can't break away from it all of a sudden. We need to transition these processes. So, what is the picture at the moment, and should we be positive and hopeful for next year, or perhaps a little bit more conservative in our thinking and skeptical? I think that there are reasons to be cheerful, as an old rocker used to say, as Ian Dury.
Is that Frank Zappa? I don't think.
No, it's Ian Dury, bless him, brilliant artist. But reason to be cheerful, part 2. There are reasons to be positive, I think. There are a lot of challenges, and I just dropped some of these in there. But I do think that in 2023 we will see a landmark IPO somewhere. If we get together and we try to solve these problems as a community, and again, we're going to discuss this in more detail in a minute. Dominic has a very long list of questions for us on the panel, but also for the audience. Opinions might vary, but I personally think that we will see a landmark IPO next year. But we need to facilitate that. I really believe that next year we need to go back a little bit to the basics and see and be convinced that the solutions that we propose as FMIs, as platforms out in the public chain, as protocols providers, we don't lose sight of that, and that at least we can do these basic things in a very robust and convenient way. So that was my 5 minutes. That's my provocation for the discussion, and I hope it'll be sufficient. And I'm taking bets on my 2023, because I mean ultimately I come from the derivatives markets in my career, so my job has always been to take bets. I'm willing to take this one, to wager with you that there will be indeed an IPO, and not necessarily on our market, and I will cry if it doesn't happen with us. But I'm willing to take a bet that next year, in 2023, we will see a marquee IPO. Then we can define marquee IPO in the contract of the wager. But thank you very much for listening.
Well, thank you, Massimo. It's time now for our discussion. And for those of you who arrived a little after my opening remarks, this really is intended to be interactive. This isn't an invitation to come and watch the three of us talk about this subject. You've got to be a part of the discussion, those of you in the room and those of you online. So I'll be looking for your questions and your comments throughout this hour or so we're going to spend talking about this. We want your comments, we want your questions, and we want them as soon as possible. So just put your hand up or start speaking even. The room is intimate enough for that, to start making your point. And we will enjoy it together. Justin, you want to ask a question?
Well,
go ahead. Come on. Go ahead.
Max, I was just going to ask, on the previous slide you had, there was a point at the top, which I just wanted to ask a little bit more about.
Sorry, I'm switching. Yes.
Tokenization. So you've got a number of points on the right-hand side there.
Yeah.
Tokenization does not have an influence. I was interested to understand a bit more what you meant by that.
Well, in this case specific, tokenization doesn't have an influence on the target amount raised by the companies. Again, it's to prove the point that you have to raise money. Are you going to raise debt or equity? How much? Whether you do it under with a DLT. With a DLT wrapper, where you're going to do it traditionally, it doesn't have an influence on that.
Yeah. Okay. So really, that whether it's debt or equity, it doesn't. Tokenization is really the technology that underlies it. It doesn't really impact the decision about
how much. How much, and it might make a difference in how you distribute. I think. I think it's going to make a massive difference on that. But on the amount itself, which is the key element. How much are you raising? What is the money for? And a lot of people think that there is a DLT angle in that, which frankly I don't see it.
Yes, go.
Obviously, in the traditional world, there's an infrastructure in place like CSDs and that. What part will CSDs play in once it's a tokenized asset rather than just the traditional?
Well,
yes, that's a very interesting question, particularly in light of what's happened with the ASX in Australia.
Yes.
Has that dealt a death blow to CSDs and tokenization? Because it's going to be very easy for a lot of CSDs to think that, isn't it?
Yes. We have a regulated CSD in Switzerland, which is the one I work for, and the way we do it, we tokenize directly on our chain. We produce basically SDX native digital native tokens, but we are a private network. We are a walled garden. So the question is, in my opinion, is how you open up that walled garden in the future, and what is it going to look like, and also. If we want to play this convergence with DeFi and public chain, we need to come together, but who starts? There is a lot of knowledge and technology and innovation on one side, a lot of capital and cash and assets. Again, 99.9% of assets actually 97% of assets worldwide are still traditional assets. 3%. When Bitcoin was at $60,000, about three trillions were in digital assets. So I think that something tells me that probably the non-traditional assets need to move towards the traditional assets, or at least extend an olive branch. Start with that.
And a follow-up to that, does the CSD settle through central bank money?
Yes, we do have a tokenized version of the Swiss francs that is backed up on a one-to-one basis with the central bank money. However, it's only used to settle trades on our chain. So it's a commercial currency. It's not a CBDC type of currency.
Thank you.
But Massimo, you're in quite a good position to drive convergence, aren't you? Because you've got a traditional exchange, a traditional CSD, you've got a digital exchange and a digital CSD. But they do operate in separate universes at the moment, don't they? There's not that much crossover, although we have seen these bond issues into both by yourselves and by UBS going into both exchanges. And I wonder what that experience has taught you. I mean, do people opt for the digital version rather than the traditional version, or is it vice versa?
Well, that's a very good question.
Investors there.
No, absolutely. Well, that's a very good question. What has taught us is that first of all, the two issues are profoundly different. The first bond, the sixth bond that we issued actually this time last year, was in two tranches with two different icing codes. And 50 millions were on the traditional SIS, on the traditional CSD, and 100 million were on the digital CSD, native digital, settled native digital on our CSD. And that created a lot of problems. No end of reconciliation, or no, the administration problems, also confusion in how these two assets that were basically a copy of each other but with two different asset codes but with the same asset definition ended up in two different places, so core banking systems couldn't deal with them very, very well. But again, lesson learned. The UBS bond actually is very different. It is completely native digital, and at the back you have the opportunity to elect to settle it digitally or to settle it into the traditional CSD. What has made that possible is what you were saying, is the link we have created this year between SIS, the traditional 6 CSD, and our digital CSD in SDX. So to answer your question, that's one of the steps that we are taking to bridging the gap, to help bridging the gap between traditional and digital assets.
Can I press you on that first bond issue you did yourselves? Why did you opt for it to be so unintegrated, uninteroperable, unconvergent, if you like? What was the logic behind that? Was it legal or regulatory, or was it operational?
I take no responsibility for that. I wasn't at the exchange back in that day. but no.
No mistakes attributable mathematics.
No, there were several reasons. Is because from a regulatory point of view, it was more clean cut. Mm-hmm. Also, the clients, the feedback we were getting from the banks is that clients wanted to keep it separate. But also, there was a wish from us to reach out to as many investors as possible, and some of them were not able to accept native digital investments. So that was mainly the reason. But it was you do these kind of things, you do these POCs, and hopefully you learn how to do them.
But if I'm a private bank and I have an account at the Swiss CSD, is it part of your strategy to make it easy for me, make me indifferent, if you like, whether I'm going digital or traditional? So if we're talking about convergence, about bringing traditional finance, and I'm sure you've got some views on this, Hester, I'm sorry, butt in anyway. To make it operationally easy for people to be indifferent as to whether some of their clients want traditional, some of their clients want digital. If we're to make a reality of convergence, you're in a very good infrastructural position to make that possible. Just from a day-to-day, just doing it, settling the trades, taking custody of them.
Yeah, but that's actually one of the key and focuses that we have with our members to basically going forward bury all this in the background, so it becomes a seamless journey for the clients, and ultimately it will all depend on the way clients will decide and to keep their assets and their cash in banks accounts. But as I say, I mean, we work quite closely with the banks to solve for that. I mean, there's still a lot of processes and also the alignment between, as I said, the legal formats of these contracts. I mean, what are the mandates that the banks have in behalf of their clients in terms of not only investment mandates, but also from a point of view of suitability of certain assets. So all these kind of things, step by step, we're going through all of this. How do our systems interact with core banking systems, for example? That's the other element that we are working with our partners to solve.
Okay. Well, one of my big questions here is whether the banks are doing enough. Heston, what do you think of what you've heard so far?
It's been interesting over the last 5-6 years. I started in the industry around 2016. Security token offerings from 2018 to 2020, and I think one of the most interesting things, and I'd like to take your bet on the landmark STO by 2023.
Okay. It's done. It's out in the open.
Yeah, the World Economic Forum states by 2027. They've put out a research report that says they suspect $24 trillion worth of assets will be tokenized by 2027. So that's let's give it 4.5-5 years. We're going to need that landmark IPO next year to see that. On the traditional banking side, I think there's been some movement as far as regulatory and compliance, but in terms of actual issuances, in terms of POCs that have gone out, because I'm coming from the technology platform side. So I get to see the RFPs that go out. I get to see some of the opportunities that are there. It's pulled back, I think, as far as some of the issuances are concerned, and some of the opportunities that the banks have been trying to test out in some of these playgrounds and sandboxes. They've been leaning more towards digital assets and offering that to their institutional clients, I'd say over the last year and a half or so, from 2020 onwards. As far as the security token issuances, with regards to some of the bonds that have been done by HSBC and UBS over in Singapore with stacks, there are some opportunities there that have arisen. But overall, I think the market as a whole has really pulled back over the last year and a half, at least from an issuer's perspective, because that trajectory from 2017 to 2020, there were so many private issuances that did go out. There were so many exchanges that did get licensed. There were so many sandboxes that did put down regulatory opportunities, and majority of them kind of faded off to the wayside. So you saw exchanges like Open Finance, right, that was one of the original pioneers for a security token exchange that ended up not having great issuances, very low volume across the board, and getting later acquired by INX, which also has really had difficulties in gathering momentum. So I really do think that from an adoption perspective, it is a catch-22. It's a chicken and egg scenario, wherein you need the landmark IPO, you need the landmark issuance that's going to drive the investor interest that when you do launch on secondaries will provide enough volume that gets people more interested in potentially investing into these type of assets. So there's really this whole ecosystem that needs to congeal, and it's really about the right time, the right place, and probably luck, a lot of luck involved as well, because I think there have been some great opportunities out there. They just haven't manifested in the right atmosphere. So
anybody burning to ask a question?
Yeah, well,
Piers, yes.
it's on the cut, but people we never really talk about the customers. We look at the big bond issuers, the top 20 in the world. I think half of them said they would be doing big digital issues next few years. But when you look at the big institutional investors, say with ERISA in the US, I don't know any ERISA fund that's looking at this. I don't know any ERISA regulation that's changing. I don't know if the big sovereign wealth funds are doing this or any of the big global national.
So you're saying the big bond market issuers, the EIBs,
they're saying they'll do it. I'm saying
they'll do it,
and
they'll do it on public blockchains, but the investors are not. But we're here to talk about issuers, but as Heslin says,
if you don't have investors, you don't have anything.
Well, I think I can speak to that point. So as far as sovereign wealth funds, for instance, Temasek in Singapore.
I know, they're the exception. What about ERISA? CalPERS, for instance, they're the big, most advanced ERISA fund. Is anything happening at anyone, really?
I think the APAC market has been much more progressive and aggressive about.
Why is that?
exploring
Why is that? Why do these large American ERISA funds sit doing nothing? But actually in Asia, it's not just on the investor side, it's also on the security token side as well. We're seeing ADEX, and it seems to be getting quite a lot of traction. What explains the difference between Asia and the US? You're quite well placed to see that, aren't you?
I think the Asian markets have always been a bit laggard to the American market. So to try to catch that volume, to try to gain that momentum again, they're willing to take a leap in that direction. Especially the regulators. So financial district like Singapore, for example, to try to pull in those institutions to get adoption, to have major banks move into their jurisdiction. They want to offer these opportunities that can't be had elsewhere. We're seeing a lot of movement actually in MENA now, I think because of the same thing. Specifically Dubai, with...
These are sort of parastatal investors is what we mean. They're sovereign wealth funds, they're state-directed. Mm-hmm. Is that the real answer to Piers' question? If you're a private or even public sector pension fund in the US?
Well, does anyone... RISA is the biggest capital pool in the world. Does anyone know anything about what's happening with them?
I'm not
that's
up to
in the
date.
room,
but-
I'm just curious. I guess that's the
Are the
answer.
Swiss allowed to market to American pension funds?
No, but in terms of, I actually can confirm that. I mean, we see a lot more movement from an interest across the board from the supranationals, from the sovereign wealth funds, but also from an investor point of view. So the clients are starting to take notice for that. But as Ezim was saying, is a bit of a catch-22 situation. You have to have a very large distribution to support these type of issuers. So you need to really bring them together, and the first issuances will be very much orchestrated and engineered to be, basically, I wouldn't say prearranged before being put in, but a lot of it will happen before in the preparation and the run-up. There will be a lot of deep conversations with investors before that happen, because I think that's reality. The network, the distribution network that usually supports this kind of issuers is being built over decades and is incredibly entrenched. Works very well. So also there is from an investor point of view, you have to sweat the DLT technology a lot to give them real benefits for that type of size and scale. So I think that is going to be something that will progressively start happening. But we definitely see interest especially from the supranational across the piece. I can't remember, someone there was something in the news the other day about one of the big supranational looking at that. So.
Actually, a quick question in the spirit of an interactive discussion for the gentleman in the front row who asked the previous. Why would the investors care whether it was issued, as a tokenized security or a traditional security? Is it risk? Is it, if it's delivering the same outcome, the same debt versus equity?
But actually, it should be a better outcome, shouldn't it? I mean, if it's a lower cost of capital for the issuer, it's a higher return for the investor. Their interests are aligned. There's a less intermediaries taking money out of the issue, right?
But you still, the risk has still got to allow you to do it to begin with. You've got to set up new custody arrangements, and that's not really in place yet for a serious market. So, so it's chicken and egg on a big scale.
This is like an infrastructure restriction, maybe, or technology restriction at the moment.
Lucy, you're smiling at the back. Did you want to comment on this?
No, I think the infrastructure is evolving massively. I think there's significant.
I can't hear you. Could you speak up a bit?
Yeah, no, sorry. I think the infrastructure is evolving. I think the infrastructure is there to deliver custody solutions. I think one, institutional adoption, especially when it happened with FTX in the last 3 weeks, probably been pushed out a little bit, probably looking at 6 to 12 months. I think every major hedge fund and asset manager is seriously considering it. Everything from hedge funds to corporate treasuries are looking at application. There's a diversification factor, but it takes time, and obviously the infrastructure needs to be built to enable it, etc. I do think the infrastructure exists.
Right, so the infrastructure is not an obstacle to
Right, because SDX is offering the
Yeah.
custody service as well, correct?
Yeah, we offer custody services, but actually, one of the questions I have is this: is it in both for, and this is both for
You're supposed to have answers, mustn't
sorry, but I'm thinking.
Yeah.
I'm stealing your
can
job.
ask questions.
No, but a question that I would like to ask is this: is that across asset classes, for investors and clients, how much their investment mandates and the objectives and the suitability of certain investments weights still in these decisions, because I think that there is an element of that has been a little bit sidelined, but perhaps, I mean, there are still limitations in what kind of investments, suitability,
Like 2%
alignment
ESG
with
data,
investment
yeah.
policies and all the rest of it. I mean, how big a role do you think it plays?
I'm still on the last question. But I was just going to say that maybe we have to see the rise of the digital asset manager. But actually, I think even more so, more fundamentally, paradigms shift. And they don't shift in a straight line. Nothing happens and then crack.
Yeah.
So,
I think there's also an issue. The very large institutions are used to doing something in a certain way, and the resources put in place for that. To move that is difficult. Okay, so we've seen, for example, JP Morgan.
Could you speak up? I'm
Yes,
sorry.
I spent 2 days speaking to people.
I'm a bit deaf, and the room has a very tall ceiling.
So if you look at JP Morgan as an example, when Jamie Dimon came out and said, crypto and blah blah blah, it's all a little rubbish, and etc. JP Morgan themselves have changed. They now have the blockchain internet that they use for settlements and stuff like that. But they sort of want to do it in a controlled way. They want to control the narrative to get to the point that they're ready for it. And I think also there's a lot of money to be made with doing things in the traditional way. People are used to that sort of level of revenues and that. And they understand that it should be making it cheaper. And they don't necessarily like the word cheaper.
I'll come back to Robert's point about asset management. That's a very important question. But are banks, and I mean investment banks in particular, doing enough to make this happen? Peter's point is that actually they don't need to do anything because they're making so much money out of the traditional system. If you the Swiss private banks, which are the owners, controllers, clients, etc. at SDX, are they doing enough to help investors make higher returns and issuers get a lower cost of capital? I put that question tendentiously, admittedly, but
They never do enough. No, actually, we have a very healthy relationship and conversation with them. And then again, is about it's absolutely true. Paradigms shift in a non-linear way. So you have at a certain point you look at the old science and it doesn't fit the paradigm anymore. So you jettison it. So I think that we are at that moment where the paradigm is really shifting, and the banks are really now in a completely mental space and with a completely different narrative about this. But if you look at the reason why SDX was created within the SIX group, and again, we are owned by the banks, not only private banks, but large investment banks as well, and global banks. The reason was really to lead that technological innovation and to lead that change towards DLT-based technologies, because there was a recognition that as a marketplace, and if the banks didn't have a mechanism like, for example, owning an exchange that enabled them to do it, they would have been forced by their clients, by circumstances, by market forces to do it. So better take the lead and control it rather than being victim of it. And the result of that thinking is SDX, for example, and other initiatives. Switzerland has a very progressive DLT law that helped a lot. It allowed us to do several things that we wouldn't have been able to do in the past. But it remains that the banks created this. The banks want this. So are they doing enough? Yes, I think they do, because this is something that our CEO always says. He says, is there a risk of cannibalizing technologies, revenue streams somewhere down the line? Yes, there is. But then we're all adults. We're going to have that conversation there. But definitely, the banks are being the catalyst for this. So they're definitely supporting this, because they know that either you lead it or you're going to get railroaded by it.
just a note to those of you online, actually, we do see questions are coming through, and I'm going to ask those in just a minute.
Technological nightmare for me. This is what. This is, hello, live virtual people. I'm now moving you over to Dominic, so you can see the questions.
Before I start asking these questions, I'd like to pick up Robert's point about our asset manager. He mentioned that we need a digital asset manager. Do you detect asset managers are doing enough? I don't know, Keston, maybe you've got a...
Well, exactly. It's more a question for him than for me, because you probably a lot closer to asset managers than we are.
On the security token side, I think I've only really seen...
By the way, Heston, the first question is the acoustic is not very good. Please bring the mic closer to the speaker. So speak loudly.
Sure. Hex custody, I'm aware of, in Hong Kong has been doing quite a lot to offer their services to institutional clients, specifically for security token offerings. They have a pretty significant amount of volume and treasury from what I've been talking to Alessio, the CEO and founder, about. I believe that they were servicing a large exchange that's a private entity, largely revolved around the MENA region, somewhere upwards of several billion in assets that have been stored currently. But I think from the majority of the demand for any digital asset custodians has largely been revolved around the type of crypto assets that we're seeing today, not necessarily the STO assets themselves. Largely because of the technology itself has freeze, burn, mint type of functionality. There's not really even major necessity for a custodian because those assets could never get in the hands of unauthorized identities or person through, similar to crypto, anyone could take those assets, any permissionless, unregulated, KYC AML identity could potentially get a hold of an ERC20, a Bitcoin, for instance, whereas a security token can never enter a wallet that's not been KYC AML. So, needing a regulated custodian to hold your assets, there's, not as much necessity from that side of things. So, I think everyone's playing their part wherein they can, but the necessity for a custodian for security tokens, at least, has not really prominently shown itself as a main product line that's a deficiency in this full stack that's necessary to get the market moving forward.
Now, we've talked about a marquee issuer as what we really need to get this market to take off, but most of the issues that have occurred have tended to be from smaller companies. Companies are so small they might have done a crowdfunding or a private placement instead of what they're doing now. But here's a question from Evangelos Dianos. He says, how do you think we can educate SMEs, smaller companies, on digital assets and the ways of raising private capital via security token offerings? Because the preparation for tokenization of real-world assets and then launching a regulated public security token offering is a very complicated process to prepare and to run. The advisors and the lawyers that are present today to help issuers are advisors of archaic, he puts it, IPOs. They're very expensive. Don't we miss affordable lawyers, advisors to help issuers go through an STO process? And there is that question that actually doing an IPO is going to consume 5-10% of your issue proceeds. Well, no, more than that, isn't it? 6, 12, 15% maybe. And if you digitize it, it's going to cut that in half. And that means a lot of people are going to lose a very handsome living. Lawyers, accountants, PR, marketing, investment banks, and to some extent, as far as their underwriters, institutional investors as well. So people are making quite a good living out of this. But one way of looking at the question we've been asked is these STO platforms are actually going to do all this, aren't they? They're having to fill all those roles. They're going to have to write the prospectus and distribute it, do the PR and marketing. They're not necessarily cut out to do that. So if we're talking about convergence, about making this happen, the traditional world melding into the digital world, what does that mean? Do those functions have to survive and just make less money? or change the way they operate, have paralegals doing it instead of lawyers on £1,000 an hour? Or how's this going to? This is the incentive, isn't it? It's going to be cheaper, costs less money, is what's going to get this thing going for issuers and indeed investors.
I have a quick anecdote about that. I think working at the technology platforms that have provided this opportunity to create security tokens and distribute to these potential investors, what we've seen, coming from this technology side of things is because we are undercutting majority of the middleman services, there isn't the gravitas to try and get a hold of a particular issuance to earn the capital from it, right? We have seen mostly legal firms, though, are the ones that benefit the most from interacting with security token platforms. There are groups like DLA Piper in Hong Kong who have launched their own. So I think when you actually have an institution who is going to capitalize from doing an issuance, they're the ones who are likely to try to spin off their own platform themselves. And then, I think that will be a catalyst towards growth because they are incentivized through their own services to run that technology. We have some guests. But as a technology platform alone, trying to go to the industry service providers and aggregate all of them together, you've got all these disjunct services. They're not making as much capital as they traditionally would, so they're less inclined to pick up new issuances as well. That's what I've seen from a platform perspective.
Okay, what's your question?
I'm more concerned about the regulated markets. I think my concern is that we never talk about MiFID security to be tokenized, so I think that should be the target. So therefore, in order to
what should be the target?
To move to the MiFID security, because every time we talk about securities token, but security, what does it mean? So I think at some point, and this is why we have a new law in Luxembourg, we have one in Switzerland, we have one in France and Germany, is that in order to move all this MiFID security to this world, because the STO is the old world, the FRM, unregulated market, it's not going to be listed on the MTF, it's not going to be issued on the CSD. In order for the investor to move to a real world, which is the MiFID security, something needs to happen in this market. And this is why the reason why nothing has moved so far is that there's a lack of infrastructure. Yes, I know there's SGX in Switzerland, but that's the only one. So for me, there's clearly a lack of market infrastructure, CSD, to move to DLT in order to really to move the MiFID security into the digital world, to the NMTF, listing digital securities and then being issued and settled on a digital CSD. And that's really for me should be a focus. And I think, and this is all the confusion around the crypto assets. Crypto asset, no, it's not under securities token. Yes, there is some securities token that are not MiFID security. There will be, you mentioned the Toko platform. There's also some other platform that they do the same thing in securitized in US. These are not regulated as such. That's MiFID, and that's what I would like to clarify. Are we talking about?
So if I understand you correctly, what you'd like to see is the existing infrastructure, CSDs in particular, move to a digital model and take with them the outstanding securities which are presently custodied, settled, issued, and registered in the conventional way. I mean, one of my questions about migration, and I was a bit sceptical about it, but what is the answer to that? You must have talked about this at the Swiss Exchange, because it's an option, isn't it?
Well, yes, but that's again we go back to either you drive or you follow that kind of evolution and innovation, and really it goes back to probably my initial slide. If you don't have a correct legal and regulatory environment around these products, whether they are on chain or on public chain or as DLT securities in Switzerland, we happen to have a law for that, or they are in regulated markets like ours. You're absolutely right. I mean, we will never achieve enough distribution and clarity. I think there is a lot of work being done there. The Swiss DLT, the French DLT law at the moment is the closest thing to the Swiss one. In Germany, DLT assets are already being, by and large, clarified, and I think there is a proposal going through Parliament next quarter to extend the definition of DLT securities to equities. So that will go to a great extent. The point is that underpinning all this, there is also corporate law. And that is, again, also within the EU, is by no means a smooth landscape where all the corporate laws are equivalent. I mean, they might be equivalent, but in the details, they vary sometimes and all the rest of it. So there is a lot of work to be done in there, but I absolutely agree. I mean, without a consistent framework, then the technical solution is meaningless. And I agree with you. I mean, we moved on from TCOs, and ICOs and all that kind of stuff. That's definitely in the past, and we've seen the car crashes and all the rest of it, but it helped. I think it was one step of the evolution. Hopefully, not too many people got hurt in the process. But I think that there was another. Going back to the question on the coming in from the for our virtual attendees, private markets and private equities are a fundamental plank of the funding journey of companies, and this is where companies will be educated and prepared for the prime time of public issuances. To be quite honest, this is where at the moment my team is spending most of its time, is working to take companies nearly from crowdfunding level, from pre-seed all the way through, and in order to do that, you have to create an ecosystem that is made of, accountants, lawyers, and, syndicates. You want to bring all this together. And that's why we're creating a platform to support all this. The big losers, in my opinion, will be the, I'm sorry if any of you work for one of the big legal firms. I think that the big legal firms are going to be the big losers in this. The big opportunity is instead for law firms that, like Piper and all the rest of it, focus in building a product to support these companies. And again, and they go through the same process as the banks did with us. Yes, it cannibalizes some of our revenues, but ultimately we might be priced out of the market. So we might either bite the bullet now and drive this, rather than 5 years out being out of the market completely. So I guess that this is creating, even in private markets, this is creating a massive opportunity for new roles, new business, new streams for old companies, but also new entrants. We see, for example, share registry companies who are connected to are connecting to our environment, starting to provide a lot of these services because they provide share registry, cap tables, they manage ESOPs. They're starting to look at digital governance of these companies. They start looking at how does it, what is your funding journey and what is your plan? Secondaries, how are you going to structure it? This is all very precious knowledge that they are targeting to these young companies or startups, very, very small, but also SMEs that are out there but are still growing. And is a massive opportunity. And so these roles are new, they're hybrid. There will be paralegal services wrapped up into consulting companies, wrapped up into company valuation services. We've seen there are companies out there who have started providing company valuation, And some of the products we see are absolutely amazing. I mean, able to extract value from unstructured information. They run AIs capable of sifting through tens of thousands of pages of documentation from PDFs, from CSVs, and all the rest of it, and extract financial information to then build financial statements that then can be given to investors in a structured way. And there are other companies looking at taking these statements and validate them and certificate and producing digital certificates. So if you can do all this through if you can reconcile all this through smart contracts and keep them on ledger, then it becomes a very powerful proposition for these small companies, and it will automatically, after a period of adoption, start bringing down the cost of issuance. Going back to your point, Dominic, it's very difficult to gain real insight and real visibility on these things. But the cost of raising capital, and this is almost identical if you are you doing your A or B round, or if you're IPOing. Apparently, is between. Apparently, we got good intelligence on that. Is between 10 and 15% of capital raised. It's not a huge problem because.
What's the answer? The question that's really been raised is, should the existing securities markets, there's 110 trillions of equities, 120 trillion of bonds, which are issued into CSDs all over the planet. And if you just took Euroclear and Clearstone, it could move the Eurobond market into a digital form. But why would they do that? They don't really have an incentive to do that at this point. And listening to you, you at the beginning we were talking about we need this marquee company corporate issue, and then people will imitate that. We're seeing most of the issues come out of the small, the sort of private placement, SME, pink sheets end of the market, which you've been talking about now. You can make that much lower cost. They've never really been able to issue securities before. Now they can do this with this technology. Do we have to choose between migrating the existing system, building a whole new ecosystem with these SMEs and pink sheets companies, or do we wait for that marquee issuer to come along? And all these things need to happen at once. What's going to really turbocharge change? And I quite like the idea of just moving what you have to a new system, and those companies getting the benefits and not having to do much work to enjoy them. I don't know, maybe it's a good question for you, Hesam. Do we have to grow the rival system, or can we migrate the existing one, or do we just wait? I haven't got much life left.
I think Max brought up a good point with the registrars and these cap table services that are servicing the SMEs. One of the reasons we haven't had a marquee issuance is because the pool of opportunities for security tokens moving into secondaries has been so small. And they are usually struggling companies that are, trying to seek alternative routes for funding. Couldn't do it the traditional way. Let me try to do it with an STO. Now, if we get into the area where we can scale the opportunity for SMEs, pink sheets, smaller companies through some of these cap table services like Carta. For example, Carta has something called Carta X, where they're offering tokenization services. When that goes at its scale, maybe to accelerators, Y Combinator, these type of opportunities, it can help startups start to emerge that are already using tokenization, and it becomes a bigger, honeypot for investors to start moving into that field. The ones who've already been successful will, advocate for that type of technology. But until we have that, I think it's still, again, it's throwing a dart at a board with a blindfold on at the moment. There's just not enough issuances to date to really predicate the growth of an explosion of an ecosystem.
Robert, you wanted to say something?
Crikey, that was a few.
You forgot. Yeah.
A while ago.
I can't blame you. It was a while ago, wasn't it? Yeah. But funds.
What I was saying that, and you kind of moved into it. The whole point of this technology is it disrupts, and I know it's You hear that a lot, don't we? But so we're taking away the classic investment business banking model, the corporate finance, the corporate treasury, the corporate actions, all this stuff.
Corporate lawyers too.
The lawyers, right? I've always felt that the exchanges have always had a very important role in educating the marketplace, right? All these, in 1973, the first put option was traded on the American Stock Exchange, and that was classed as an exotic.
Yeah.
Right? We've moved on since then. So they have to take the role. I get that what you're saying about the banks, but you were saying about the lawyers. If you come up with a product, my feeling is that the investment banks are holding things down and asking the regulators to slow things down so that things can be done in an orderly way. Whether that's right or wrong is the point. They're saying, look, we've got control and order of some sort right now. Give us a chance to build the tech, this new tech, to service these clients, and then you can open up the marketplace. That's what I feel is going on, because it doesn't make sense that Dubai and many other jurisdictions are way ahead of us in terms of regulation on digital assets.
Yeah. A lot of it is structural as well. I mean, we are in a trend whereby companies stay private for longer. So, and that segment is completely unserved. And you're absolutely right. There is so much education that you need to do, and we are doing it. We're building now that education, and because otherwise, things are never going to change. Companies will continue to bake 10-15% of their capital raise extra to pay fees. That's unproductive capital, and over a period of 10-15 years, while you raise a round after the other, it does make a difference. As an investor, I invest capital to be used for the business of the company, not to pay fees for consultants. I think that there will be a segmentation of the market if we do it right. A lot of the banks, we know, is not that don't want to do smaller business, because it's a completely different business model and margin profile. They cannot, because a lot of them are like it or not. They have very stringent due diligence processes, KYCs. They want to, and they're rightly so, they're risk adverse in certain areas. So that is one of the reasons that they will not get involved, because they just can't. However, we have crowdfunding in the traditional world, right, left, and center, is not going to go away. Due diligence is sometimes on companies is sometimes questionable. As an exchange, and creating an ecosystem that is based on that, where we can digitize that and make it easier to process the volume of these transactions that are smaller, but create opportunities to extra entrants that innovate or can lower cost, or perhaps even maintain the same profile, but doing something that really helps issuers and investors getting together in a much easier way. I think that there is a lot to work, and I mean, again, my team works a lot and spends a lot of time thinking about this kind of things. So I think that there is a lot of value. But again, to the point, I think you have to create that funding journey first, and prepare companies to get to the prime time, and then we're going to get the marquees. I still think that next year there will be someone who will throw cautions out of the window, convince a bank, and we will see a marquee issues.
Okay, I'm going to ask you in a minute about how you work with Actionariat, which is quite interesting to the point you're making. Piers, you had a question.
I was just actually going back to the original topic of who's going to be the market issuer. If you think about most of the big changes in capital markets, they've been driven by regulators, by governments. So governments could see bonds, stuff like that. They could just make this happen. Why isn't the Swiss National Bank or the Swiss Federation doing it? So Singapore's sort of tiptoeing around it. I mean, you know those guys. Why aren't they doing that? That would make the whole thing happen.
well, we've had a very successful relationship with the Swiss National Bank because we've done Project Helvetia last year on the CBDC. Proverbially, with governments, things move very, very slowly because, again, they have a completely different rationale and way of looking at that. You're absolutely right. They could make this happen like that, but
Thailand stuff already. I mean, they did a couple of billion bond, and they said they would do all this stuff. But it's just curious because they're the people that just say this is happening.
Completely, but they move very slowly, and rightly so. I mean, if I would be a Swiss taxpayer, I would want my government to be very cautious on this kind of things. So, but they could technically make it happen very easily. That's true. Then whether they're gonna take the whole of the rest of the market with them, and again, I don't think that the two things would happen so automatically. But definitely, they would send a massive signal. Positive signal.
No, I'm just curious, all around the world, the governments are backing this stuff.
Yeah.
I have another question. This time, this is to the panel, maybe specifically towards Matt, to whether you can share with us any sort of sense from the issuers that you are talking to as to how close they are to becoming that sort of marquee IPO, whether they are taking it seriously. Is it a serious consideration, or I guess at the end of the day, anyone in those firms, it's their job on the line to make sure that an IPO is going to be successful.
Yeah.
And so that's a big decision to go first and to be the first big one. Is that the resistance? Are we just waiting for someone bold enough to do it? Or is it something more fundamental? In your slides, you've got, is it the legal framework? Is it the market infrastructure? Or is it the concerns about distribution and, asset managers not being ready to take these assets on?
In our case in Switzerland, and especially I'm talking for the equities asset class, which is my wheelhouse, there is a mixture of two things. The regulatory environment and the legal underpinnings are there. We are ready. We have a market. That is the regulated part of our market. Is the market for IPOs is there. And we have two segments. Also, we want to facilitate this kind of thing. So we also have a segment for SMEs companies. Distribution is clearly a limit. We need to grow our network, so we know that. But we think that we're gonna get to a size probably next year where it starts to become interesting. Conversations with potential issuers, we have them very often. But then again, a lot of our issuers wouldn't come directly to us, would go through our member banks for a number of reasons. I think that the other thing that is missing is really someone who throws caution to the window and says, okay, I can live with a slightly smaller distribution. But also don't forget one thing that we linked now into the traditional exchange, so we can apply the same for equities, the same model that we applied for the last bond issues, where we issue native digitally, but then is settling across the two platforms, and therefore that automatically opens up the network and potentially distribution. I think that we need someone bold, someone out there. We have conversations, and I think that this year someone will break ranks and will say, okay, let's do it, and let's see how it works out.
Heston's going to take that bet with you.
Yes, he's already taken a bet.
We must stop in a few minutes. Here's a question from the virtual world. What do we see as the first basic tokenized assets? Just forgetting about STAs. Will it be real estate, existing bonds? What will they be for? Equity, increased debt, new bonds. So talking about the asset classes here, could I add to that funds? And I mentioned that because we're actually doing a webinar on fund tokenization a week today, actually. No, next week sometime. And we've had a huge turn for that from asset managers. And I detect that actually funds are becoming an early use cases because the asset management industry has these issues of profitability. they're kind of more interested in this area than almost any other type of issue. We're not really used to thinking of asset managers as issuers, but they do issue funds, don't they? So it's a logical thing for them to be doing. So what's the answer to this question here? I feel we've been going around the houses a bit here, but is it real estate, private equity? Where are they? Why aren't they bringing issues to market here? Why hasn't it become like the IPO market used to be for them to realise the value of those long-term investments? Heston, if we accept we're going to have to grow this from the smaller end of the market, or the illiquid asset end of the market, or the obscure assets, the commodities, the real estate, etc. It's almost like you name your asset and it could be tokenized. But,
Right.
Is there a sensible answer to this question which people take away with them, that actually this is where it's going? Is it funds? Is it real estate? Is it SMEs? That's a sensible way of looking at it. What's your instinct? We're seeing lots of SMEs come to market. We're seeing a lot of single properties come to market. And we're potentially going to see, and we're seeing funds in Singapore. Annex has listed quite a few funds, and they've brought down the ticket size for those, but it's still not really taking off.
Mm-hmm. We've seen plenty of real estate tokenization. There are dozens of real estate tokenization platforms that are already live globally. Singapore has quite a few, even trying to get up potential exchanges around it. Still within my view of where the market will take off from a tokenization perspective is it's either from the primary market, SMEs that are started that potentially blow up into unicorn status, gain notoriety from using this technology from the beginning, and propagate the ecosystem through that method, or potentially, like we were talking with this gentleman, and you brought up the question for the investment banks, when they see the opportunity and know that they can make enough money from it, then they'll hop on. I think everything that's been done up until now has been a playground for private market issuers, for regulators, and everyone's just watching and waiting, right? And it's just like and sorry to bring up the crypto side of things again, but it is like the Bitcoin narrative that went on from 2017. Bitcoin is rat poison squared, JP Morgan, and eventually to opening their own OTC desk. And I think that whenever that opportunity does arrive, where there is an issuance that they can take a hold of and say, this is ours, we've been waiting the whole time, we've had the tech ready, now we're going to advocate this. At that stage, then it will become rampant among every investment bank, and they'll open up doors and say, we've had this technology all along, and we're moving all of our issuers into this segment. I don't know what that asset would be. Otherwise, I'd start investing.
It might be funds. I promise to ask you about, we must stop in a minute, but I'll promise to ask you about Actionaria, because I think that you have a relationship with them where people can use their accounts at SDX or the Swiss CSD to acquire assets. They seem to be having some success among smaller companies. They're doing lots of issues, and the model by which the liquidity they bring is actually a principle-based model. Correct. Like the fund industry, where if you want to sell your shares, you go back to the issuer and say, could I have my money back, please? Now, if the fund industry, which is, 70, 80 trillion around the world, it's a big bunch of assets, if that could move towards that model, maybe even migrate it to your thinking by just adding another share class, which is a tokenized share class, and suddenly you have tens of trillions of assets, and the liquidity continues to be supplied by the issuers initially, but maybe eventually you get a secondary market going. That could be transformative for the economics of the fund industry. Do you detect, Switzerland's a big fund market, do you detect much excitement?
Okay, definitely funds are on our radar. They are on our roadmap after we developed ordinary shares and bonds. The idea, I do not know what type of funds will be the right ones. Private equities have an interesting profile. Private equity, you need to solve the capital commitments drawdown issue, which I think it's a fascinating issue to solve, but it's definitely a challenge in terms of structuring a digitized security that responds to that. But I think that, and my experience so far in the last few months is that we get the most of queries that we get are from private equity funds. So I would say probably the first fund that we will see, it will most likely be a private equity funds, because they are the ones that are doing most of the work, not only with us but also across other platforms. So it is going to be that. Actionariat. The link between the two, between them and the SDX is not there yet. It's going to be there for the next year. I know. No. It's definitely something that is happening. I mean, we can say this because we are building an access API for all these companies to connect to us.
It's like the Boston Exchange has a deal with the DTCC as well. I think that's the way to make this happen.
Exactly, and I think that, for example, when you look at when you're looking at SME at startups and private equities, we as an exchange we're starting to think, okay, if it's the private market, the public market, clearly we want to own the secondary liquidity. But do we want to own and centralize the secondary liquidity in these small companies? Perhaps not. There are OTFs, MTFs already out there who are doing fairly decent business. What we can add in terms of value is the digitized securities CSD component. So with Actionariat is that they continue to run the structure will be that they continue to run the principal based secondary liquidity, but then the trades are settled with the CSD. Clearly, at the moment, the way we're structured, there will need to be a bank involved somewhere, because our members are bank, and Actionariat is not. It doesn't qualify as a member CSD, but that is the model, grosso modo. Why? Because I think that if you are a business like Actionariat and you started to be very successful with investors, in order to go mainstream, you need to appeal to the distribution that is owned by, guess who? By the banks. And also you want to, even if you accept payments from directors' investment, directly from investors, either in fiat or crypto, where is that fiat held? Is held in bank accounts. So again, the banks own the cash and own the assets. So you want to work with them and actually, use them to build your model.
Too, aren't they? And the CBDCs, yeah. Banks will survive whatever happens. They're like cockroaches; they survive anything. Nuclear attacks.
Nuclear war.
Yeah.
They are creating their own part anyway, so they are originators of CBDC.
Right. Should we stop by just having, perhaps every member of the audience would like to tell me what the one thing they think would actually help this market to take off, actually help issuance to occur. What's the one thing? Would it be, in your case, a proper digital asset manager, Robert?
I actually think it's going to take off when you see competition from other parts of the world. I don't think anything's going to happen until we can start looking there.
We just need competition between...
Well, other parts of the world are going to do this. They're doing it already,
right,
and they're going to lead the way.
So it's kind of Singapore versus London. And,
yeah.
So if Singapore makes this work, London will have to do something. Your answer would be CSDs need to...
Yes,
the CSDs should embrace it. Yes. Simone, you're hiding behind Robert there.
Well, I heard Saudi being mentioned this week earlier as an answer to a similar question. So I agree with you. It's probably from areas which we don't think of yet. But I also think co-opetition is very important, that we work together in the ecosystem. So a group of players join forces and come up with.
Is BBH excited about funds?
We are, and to the fund space, I will see a tokenization which will put 1,500 funds of Apex on their system pretty soon. So I think the funds business is an interesting one to watch.
Peter, what's your tip for tokenization catalyst?
I think there's two fears. There's the fear of failure and the fear of missing out.
Fear of coffee for real time. Fear of
Missing out.
yeah.
So when that, and it's a seesaw, isn't it? So when that tips over, people fear more missing out.
Greed plays no
fear.
part. You're thinking. Yeah.
Yeah, I think that's when the battle is happening. That's when we say we now need to do this, and that's another thing.
Sergey, what's your tip for the key catalyst here? Making tokenization take off.
Less talking, more doing
Speak up.
it. Less talk and more doing it actually. Because there's lots of talk, but going to actually see, look under the hood with the banks, or because the vendors they're not very good much.
At the back.
Yeah, so I think it's going to be legislation to major areas like the
I can't really hear you. I'm sorry. I'm very deaf.
No, I'm saying legislation. So in places like the UK, depending on certain types of assets, like real estate, definitely legislation has to come into play to enable that market to move forward.
Okay. Yours?
Interoperability. If you have tokens on one chain that cannot move to another chain, you're never going to provide the acceleration required for this conflict to become mainstream.
That's music to your ears. Lucy, what's your answer?
Regulatory clarity across the board, and whether it's something obviously some of the pensions have been doing, some of the asset managers have been doing, and more regulatory clarity to see what you're doing.
By the way, Lucy, has FTX been good for copper?
I was going to say that it's been a little A in the market recently. It's been good for trading in the sense that we have a solution that enables clients to trade on exchange while our assets are really secure custody. So yes, there's a new conversation in the last couple of weeks about how we can work with more exchanges and more clients. There's obviously protection of the initial margins. It's been a busy few weeks.
Good. Justin.
I think probably sensing that it's maybe the distribution question, which kind of relates to that first point at the beginning about asset managers being ready for this, and that anyone making a decision about an IPO will always have in the back of their mind how successful is this going to be, and will it be less successful if I do it from a tokenized version. So I think the distribution
It might look cheap, but it might not work.
I think it probably thinks into a bit of what these chaps are saying, that it's going to be invested in the market.
You know, that's what drives their all change is what the customer wants. That's what's going to drive the regulators to make a decision that the big asset managers to take a lead in favour of technology.
Andrew?
I'm going to do the sensible thing and agree with the ladies at the back. I think regulatory certainty.
Yes, we think it's ringing up calendars or getting the government
I think the title of this webinar is probably the thing that we need a market, but it's never going to happen at the pace we're going currently. And I think the funds are a very good choice, actually.
But the government doing a gilt issue and tokenized
I think the fund thing is actually most likely to happen.
So, quite a mix of things there, which we will keep a careful record of and play back to you in our write-up of tonight's discussion. But I think we must stop there and start drinking that wine that's been poured. I'd like to thank our panellists first, Massimo and Heston, for And I'd like to thank all of you actually for being here and for getting involved in this way. It's really gratifying when that happens and you start to play off each other and we have a full discussion.
And our virtual audience.
Oh, and thank you virtual people. I saw all your complaints about the audio quality and I apologise for that, but thank you for your questions as well and thank you for being with us and thank you for that reminder, Wendy. And I'm sorry you can't join us for the red and white wine, which is before my eyes at this point. We'll stop there. Thank you and goodbye.